Welcome to the Trading Challenge. This is Levy Alexandre presenting to you this experiment for the purpose of finding out more about online trading. This is an experiment that I have started on May 22nd and it is scheduled to end on June 21st, 2023. The truth shall either set us free or otherwise we will die in darkness in the pool of unsavory lie. There is a disclaimer that you will find below this video. Please read it to make sure that you understand whether this presentation applies to you, especially if you're given your financial situation or your investment plan. And please discuss with a qualified advisor when it comes to any financial or investment advice. You can find it in the description at the bottom where it says disclaimer. There is a link. Just click on it and you will find a copy of that disclaimer. This is a summary that covers the 3 weeks that we have completed so far, starting May 22nd into June 10th, and today is the summary as of June 11th. And then we have one more week to go before we close that experiment. Here are some of the results, and that is only for the 3 weeks. Just a reminder, this is an experiment that is organized for the purpose of finding out whether trading can truly be profitable and can it also be sustainable if it is profitable. And then if you are profitable, then what would be a good ROI target, which is a return on investment target? How much should you expect to make every week or every month, or every day or every year? We have started with the idea of doing trading every day on Forex and crypto. But as I have stated, the premises that we had were subject to adjustment as we go to the experiment. And as we're learning more about the real-time experiment of trading, it's kind of impractical for data gathering to trade both crypto and Forex at the same time. Because of that reason, I have adjusted the purpose, and now we are only focusing on crypto. We have done that for 3 weeks, and let's see how we've done. I started with a capital of $600, which is modest, and given the general situation of the world, that's something that most people could access, even directly or through family loans or selling something. $600, and over 3 weeks I was able to make $528. Truth be told, we have taken money in and out for the purpose of replicating the real-time experience of a trader doing online trading. Let's say you were to do that and you have to rely on that as your only source of revenue to live. Could that be possible? And in this experiment, I was able to take money in and out, and regardless of that, the income was $528 over 3 weeks, which represents a return on investment of 88.08%, and the total trade is 88 trades. Out of the 88 trades, I was able to win 84 of them, which is 95.45%. And it's also it's a good feel to share with you that so far for the past 3 weeks, I have made a profit every single trading day. That means there hasn't been a day where I lost money. There was always a positive income every single day of trading. Now, the results so far. Let's just break it down into a week. Let's go over week 1. As for the week 1, for the results, which started on May 22nd and ended on May 27th, 2023. On May 22nd, when I started with $600, I made $44.88, which is pretty good. That was a strong start, but then it dropped to the middle of the week to because of some personal issues I had to handle that week. And then once I cleared my mind and I was able to kind of picked up again in terms of return on investment. but the amount that I made on the first day, I never made it again to the rest of the week, which is $44. But the ratio, the return on investment increased. As far as the win ratio represents a ratio between how many trades you've taken and how many of those trades you actually turned into a profit. And during that week, on Monday, every trade I made worked. Tuesday, every trade I made worked, which is 100%. And then I dropped to 40%, and then I picked up again to 90%, and then 100%, and then 100%. So from that day forward to yesterday, when I ended that winning streak, I have never lost a trade. Although about the last trade last night, as I was tired, I made a sleep rage mistake, and then we had a glitch there. And where you see the amount that is in red, it means a transfer out. So there will be transfers that are made into the account, and there will be other transfers that are made out of the account. When I say account, I mean the trading account. So let's say I add $200 into the trading account to increase my overall capital. That's a transfer in. If later on I take $100 back, that's a transfer out. So whenever I put money in, I will put them in black. And when I take money out, I put them in red so you can follow along easily. Now, for week 2, it wasn't so different than week 1, except that I put the money back. That's the highlight of that week. So I started with $196. I made 0.64% profit, which is 0.33% really, because there was really no trading or low trading. I had a lot in my plate that day, but I still managed to keep it in the green. And then I added back $170 and I increased my return on investment. And for the whole week, I had a win ratio of 100%. And I closed the week a bit stronger with 62.33%. If you can see, at the end of that week, I was able to increase my return on investment to a ratio of increase my return on investment ratio to 5.26% from 0.33% the first day. That's not so bad. And that week ended on June 3rd, and then I took the June 4th off. I like to take my Sunday off to do teaching and other endeavors. And also one thing I'd like to point out as we go into week 3. Week 3 was very interesting, and I'll show you why. I noticed that between the week 1 and 2, because I was just learning so much, I was very cautious, very controlled in terms of the kind of risk that I have taken, and my overall return on investment reflected that, about 3 to 4. I had an average of 3% return on investment during the first 2 weeks. I purposely decided to take higher risk, meaning invest more money into position, because when you go into the position, you have a choice to decide how much money you want to go in with. And I have set my mind to not only go with more money, which means putting my whole entire investment to a higher risk of a loss if that position didn't work. I did something else. I have decided to take more position, meaning whenever there is a clear shot, I'll take it. But when there were not so clear shot, I did a bit more research to find trades that I didn't find during the first 2 weeks, meaning I tried a little harder so I could increase my trade volume. And I did that. So on the 3rd week, I closed the week 1 and 2 with 45 trades, meaning 22.5 trades per week. And then on 3rd week, which is Monday, June 4th to June 10th, which is yesterday, here are the results. The first day I started with $50, which is 4%. And then look at the next day, I doubled that amount of profit, which is $119. I took $600 out. I still was able to make more money the next day, even if I withdrew $600, and I increased my return on investment again to 7.4, which is higher than the average of the first 2 weeks and the overall average, which you will see in the next part of the presentation. And then the following day, I took most of the money out, which is $1,450, and I was left with only $500. I still increased my return on investment to 8.9%, which is $44.63. And then it continued to get better to the highest return on investment of 16.16, and then it dropped at the end of the day, which is yesterday, to 14.3%, which is 16 and 14% were the highest I've ever reached for the whole 3 weeks in terms of return on investment of on investment or on any day. The point I need to make here is this. By the way, you can see that in the last day I had a win ratio of 92.886. What happened is, toward the end of the night, I got out of a position because I didn't like it. I was supposed to make about $1, and the market moved on me so quickly. While I was closing the position, I made 0 point something percent. I made a few cents loss, but because I want to keep it real, it wasn't a trade. It was more like a slippage. It's called a slippage. Slippage when you make a trade for a reason and the market could not fill your order and instead did something else because of a fast move in the market. That's what happened with that slippage, but it's okay. So I still had a ratio of 92.86 yesterday, so that's not bad. And I took some money out again because I like it to be as real as possible, and I also like to use the money if I can. It feels good. So now, as you can see, these are the win ratio, and this is the return on investment. So I'd like to now do some analysis of the return on investment, because I know this is a very important topic for me, even sensitive for some people, whether you some return on investment or realistic or not. You probably have heard several firms or companies online and offline offering a certain amount of return on investment, even daily, and high return on investment yearly. And we have financial experts all over the world advising us against any of those routes, telling us that the average market has been a certain level, therefore we should go by the average. They use average S&P 500 average, Dow Jones average from notable firm around the world, average of the performance of different assets to guide their clients. And I'm not against it. Whatever you can do to make sure you keep your clients safe, this is something you should do. However, to venture to call it as a norm because that's what you've been saying, and we all have been saying it, to say that this is exactly how it should always be, it's in my view not including everything that's happening. And in my experiment, what I'm finding out is that trading actually bring high reward when it's done properly, daily, not even yearly, daily. And trading is not really following the market average of the year, but they try to get the market average every day, and that's important. That's a key point that people should keep in mind. I'm not saying it's for everyone, because I'll tell you this, this was hard, and I cannot have any other nicer way to say it. It was hard to maintain 100% and to make a profit. It's hard work. So, but it can work. That's what I am finding out, at least for the first 3 weeks. But I have some points I'd like to highlight before we make a conclusion, and we're not making a conclusion today anyway. But before we get closer to making that decision, as far as making some bold determination based on the data that we will be analyzing, I'd like you to analyze the return on investment with me now, just for the 3 weeks. Just let's do some data analysis and see what it looks like, right? So what you're looking at right now is the return on investment over the last 3 weeks for all of the trading day, all of them, including the first day of May 22nd to the last day of June 10th. As you can see in the graph, the blue line is showing you how I performed. On the first day, I started with about 7.48%, and then it dropped the next day to 1%, and then it increased again, dropped a little bit, went up and dropped down to 0.33%, and then it kept going up and down like this. But do notice that toward the last week, starting on June 5th, it kind of went into a slope and it started to increase. And that is in relationship with a decision, a formal decision I have made prior to that, to the beginning of that week, to make the third week a more um, a risk tolerant week where I would be more open to take risk I was not willing to take during the first 2 weeks. And you can see the risk, the higher risk came with higher rewards. Is that a clear shot? Is that a clear thing that you take higher risk, you get higher result? I'm not saying that yet. I'm just showing you what the data demonstrated for that week, which is this week, right? Okay, so let's look at the result on my left. You will see the first day we opened with 7.48% return on investment, not so bad. The next day the last day we did 14.3%. But I want you to look at the graph again, and you see on May 29, instead of getting higher, we got the lowest of the lowest, which was 0.33%. And that's the lowest we ever got, and it never went that low again after that or before that. And the highest we've ever reached is 16.16%. And just the last week, which is the week that I have decided to take higher, this is the time also that we reached the highest level of return on investment. And the next day, it didn't even go down that far from that level. It still remained at 16.16%. But the last number I'd like you to look at is the average. And it's important because I'd like you to see it from the graph. This is where you see the big red line. This is the average return on investment over the 3 weeks period. Now, this might not mean a lot for some people, and that's okay. But I was interested to see if there's any math to it or anything I can learn from it. And then I started to see things that are pretty interesting. I'd like you to look at this with me, and you will notice something that's kind of like amazing. It's like trading. As a trader, I am trained, well, not tested, I'm trained to think that way when I'm looking at average, because I use moving average line all the time. And when you see the average, you will see that I crossed it the first time, I went down to 1%, and then I tested that average in about end of the week, and then into the beginning of the next week I kind of pull back. That's what the market would say. And I tested it again a second time. Look at the double top as you're trading. Then it dropped naturally, as if it's a natural human psyche. And then after that, I tested it a third time, but this time I went above the average of 5.75. And then my performance dropped again, but this time, because I was aware of this as an area, it's like my subconscious was aware. I'm just trying to read this, and I may actually be wrong, who knows, but I'm just trying to make sense of the data. You might find another interpretation, and be my guest if you can, right? But it looks like as if my natural instinct was made aware of that graph that I didn't even know exists, but in the back of my mind, I knew that I was not gonna make 0.33% again. And then, of course, sure enough, I made 1.3% that day. And then the next day, instead of going down, I made sure I increased it. Well, I increased it to 1.63. That's not so bad. And I tried to test the average again. Naturally, I didn't even know the average at that time. And then look at what happened. It dropped a bit, and then it pulled up. Look at that. It rallied. I crossed the average on June 6th, and I wouldn't come back to it ever again. Like a bull uptrend, like an uptrend. And as you can see, here I am almost at 10%. I'm already at 8.9%. Then I crossed the 10% level, and then I crossed the 15% level. But this time it looks like I kind of went a bit above my kind of peak. It's kind of like my highest point for that week. And as you can see, I was tired a bit, I retired here at 14.3%. But you can see the graph is showing some kind of pattern that's almost similar to what you would expect a market to do. In fact, a market is nothing but a combined um, a compound behavioral pattern of all participants at any given time. So the market is nothing but, when we look at the graph, it's a reflection of the overall mental state of the traders or the people in the market. And I'm no different than the other people in terms of human nature in and by itself. That's something we will explore maybe in other classes when we are doing market psychology. So I tested the average 5 times, and the last time I succeeded. So normally when you see a market keep testing something back and back, they want there's um, a willingness to cross that, to outperform that level or to break it, right? So, and I was able to break it. But I want you to also remember I made conscious decision that also goes into the story. The second thing is that the third week is a week I took higher risk, which means that explains why when you're looking at the graph, it also shows higher return. And the third week also, I had more trading. That also is important to remember, because the first 2 weeks I had 45 trades for 2 weeks combined. This means that each week had an average of 22.5 trade per week. But the third week alone, I was able to do 44 trades, which is double any of the first 2 weeks. So I was able to double my performance and take more trades and take twice as many trades than I would take the 2 weeks prior. That's also something to keep in mind as I increase my trade volumes and I also increase my risk tolerance. I am looking at the graph and I'm making a higher return on investment. Is that something that can be sustained? 1 week is not enough to tell us that, but at least that's what we were able to see from the graph so far. As far as the perspective for the 3 weeks compared to the perspective I had last week, we go back to the basic questions again. Can trading be both profitable and sustainable? So far, I'm inclined to say yes, based on the data so far. The second thing is, if we look at the ratio, if you look at the details, let's look at the positive and negative of my statement. I have a win ratio of 95.45%, and that's not out of one trade. We're talking about 88 trades, almost 100 trades. So the luck element is almost irrelevant in that point, because now at 88 trades you kind of have enough trade to kind of look at the overall picture, and I was able to get 84 wins, which is 95.45%, and my overall return on investment is 88.08% over a period of 3 weeks. That's almost double what I started with. I almost doubled my investment, my initial investment, I must say. And then one thing that I didn't have last week that I was able to do this week is to look at how I perform in different market trends. And last week, the first 2 weeks, it was more like a downtrend type of market. The second week was more like a sideways market, and the third week was very sideways. So we had and then it started to reverse back into an uptrend toward the end. And regardless of what it did, uptrend, downtrend, or sideways, in all the trends I was able to make profit at the end of the day. So that's something I wanted to know. The first 2 weeks I could not say. Now I can answer in the affirmative that I was able to get a profit on all trends. And then by closing the week strong, even if I was tired, and I was able to increase my performance instead of seeing it closing at a lower point, that's a good feeling to start this week, the last week of the experiment. So that's a good positive to look at. Now, as far as the negative, I have to admit that I had a lot of help that you don't get usually in a quiet market. There was a lot of movement in the crypto market where SEC has started a strong legal action against the top traders of the world, the top exchange of the world, I mean to say. One is Binance, which is the top trader, the top crypto trading platform in the world, and Coinbase, which is the top trading crypto trading platform in the US. So by doing those actions back to back, SEC sent a strong signal letting the crypto market, we're coming for you, and that kind of created the type of negative vibe. And there has been other action prior that has also created the kind of negative feelings that I was able to include in my trading consideration when I enter the market, to understand what the bias should be, where the bias should go. That helped me a lot in making trade that turn out to be successful. That doesn't happen all the time. So there are the quiet markets where you don't get as many clues. Then you will have to try harder to understand what the markets want to do. So this also is a factor I have to keep in mind for people to take it with a grain of salt when they see all those great results, to understand that there are some other markets where you don't get as many cues to know what to do. And the other thing is, I had to kind of pivot, meaning I had to change the focus. We've only done crypto only, but beside that, I've also stayed only in derivative market. So it is good to say that in the derivative market for crypto, I was able to make so much money, but that doesn't mean in the spot market, meaning when you buy, hold, and wait, it doesn't mean you will make as much. But we can always maybe try an experiment like that next month, for another month, where I would do the spot market only and see how it works. So we'll see where that lead us next week, next month. If there's enough time, we can always do that experiment. What should be a targeted ROI so far based on what I'm saying? I do not know yet still, because it's still enough other areas I'd like to cover, and these are the most important one. First, I need to make sure that I have a better target now. Instead of saying crypto and forex, as I stated in the beginning, now I want to say crypto only in terms of market. And even inside of crypto, I want to say crypto derivative only. So by limiting my scope, I'm able to allow people to use the data more efficiently, to know exactly where it applies. So my experiment really applies to crypto derivatives in terms of understanding what a return on investment should be. And based on my style, and that can vary from any other person's style based on their personality and their skill level and their risk tolerance, so on and so forth. Based on my style, risk level, and personality and skill level, which I consider to be a little above average, and I'm a teacher of trading, so I'm able to maintain about 5.7 average per day in terms of return on my investment. But then again, something to take with a grain of salt, because I have to also state this is something that applies to crypto derivatives market. And the second thing I'd like to try, because I have tried different style, I have tried volumes. Last week I increased my volumes, and I have taken higher risk than I would take. Now I want to try higher trading frequency, meaning I want to trade in 1 minute um, time frame, and stay there between 1 minute and 5 minutes, and take quicker trade to see if that changes the numbers this week. This week I want to do a bit of high frequency trading, not to the level of the computer, but to level of tolerance for the human brain to process, and see as I go to high frequency and do a lot of scalping, what this is going to be like. Meaning, instead of doing 45 trades per week, I'm going to probably end up with 10 to 20 trades a day, even 40 trades in one day, which is what I do in a week now as a max. I'm just going to push the envelope this week a lot and see what it leads up. Thank you.